Hey guys, thank you so much for joining me today. I am Azim Zarif. This is Investify. In today's video, I'm going to go over two stocks that I believe are really undervalued and have huge potential in the long run. Perhaps in the next couple of years, they can even go 5x their current valuations. So, the two stocks that we're going to be discussing today will be number one, Couchbase with ticker symbol BASE, and the second one is Tech Target with the ticker symbol TTGT. Full disclosure, I am an investor in both of these stocks. This is definitely not financial advice. This is just me, a random guy on YouTube, just talking about his interest in stocks and in crypto. Um, and besides that, I really hope no one's watching this video. But if you are, please keep it to yourself. So let's get right into this. We're going to start with Tech Target first and foremost, and I'm going to remove my face out of the way. Tech Target is a internet tech company, and just to give you a bit of a summary, it provides marketing and sales services that deliver enterprise technology. They're in the enterprise space. Um, they have demand solutions, um, and you know that's what they're working with is basically on the demand generation side of things. So as a company, I always like to look at a couple of things to make my analysis. I'm looking for long term, what is the current valuation of the company, and also I'm looking at the charts. So coming to the current valuation and looking at the market cap, it's only $2.48 billion. They have about 200 million in sales, so that's why their price to sales ratio is about 12.47. Their price to free cash flow is pretty decent as well. It's 45.06. Couple of the numbers that I personally like to look at in companies are quick ratio and current ratio. These are basically quick ratios talking about the short-term liabilities that the business has and can they afford to pay those. So any number above 1 is very good. That means yes, they can pay their short-term liabilities, and current ratios as well, the liabilities that the business has, can they pay those. And since this is 2.9, this is very, very good. We have to keep in mind companies like Apple might have it at 3, Amazon might have less than 2.9. So in terms of that, they do have cash on hand. Now, a couple of other things is that the sales are growing 83% quarter over quarter, which is fantastic. Earnings per share for the next 5 years are estimated at 30%. And we see gross margins are fantastic at 72.7%. A couple of other things to note is to invest in companies that are already moving up, that are already growing. And that's why the 52-week low, this stock is already up over 100% from that. And listen, we're talking about just a very small market cap. Tech companies nowadays are in trillion dollars market cap, or 20, 30 billion is no, difficult feat for these companies to achieve. So this company is genuinely a growth stock with huge potential. And that even currently the target price is 99, but I believe that this is just the beginning for this stock. So those are the financials. I think the financials look great to me. The business is growing. Now let's take a look at the charts here. And let me just kind of make this a little bigger for you guys. And so as we can see here, that we have the low again, March 20th was that day when COVID just went berserk and everything hit all-time low. This stock was at $16.82. From there, it shot up all the way to $101.12 before pulling back to the low of 63.76. And now, after making this kind of like a double cup, and now it's making that handle, it's ready to kind of just shoot up. And I believe that this stock is going to go in valuation over 25 to 30% in the short run. But I do believe that this is a company that can be valued at over $10 billion in the next few years. So we can anticipate a 5x return if you want to hold this. So if I was to buy this stock, what I would be doing is that I would buy it at the current price of about $86.11, and I would put my stop loss at $63.70. So that gives me a great support level where I have a stop loss if the stock goes against me. And that's TTGT. Now let's take a look at another thing I want to see in a company is, hey, who all are investing in it? So according to Insider Monkey, these are the hedge funds that have already been investing in TTGT. Renaissance Technologies, G2 Investment Partners, Montanaro, GLG, Peak Six. So there are a few funds that are investing in it. So that's always another sign to look at, that, hey, if smart money is moving into it, maybe perhaps you should too. So that this is my choice on TTGT. Now let's move on to BASE. Ticker symbol BASE, or stock is Couchbase. So as we can see, even today, Couchbase has dropped significantly to 8.25. I have been owning this stock for a while, so I'm down over 30% on this. But that's fine, because today I'm going to load up even more on this. I'm going to buy more of this stock. And you can put your stop loss at the all-time low of about 28. Um, for me, it's a long-term hold. And the reason why I like Couchbase so much is that besides being a tech company, Couchbase is also in the NoSQL space. Now, NoSQL databases are becoming huge because of all the different type of data that is being collected by internet companies, whether it's YouTube, Amazon, Facebook, or even new startups. So they're really growing in that space. And it excites me because their market cap is only 1.63 billion. They have sales of 112 million. Um, their quick ratio and current ratio are fantastic, so they can definitely meet their short-term liabilities. And they have earnings per share expected for next year to be at 39%, sales quarter over quarter at 17.9, gross margins also fantastic, 88.3, and they are up 14.8% from their 52-week low, just because the stock is dropping right now, but there is huge potential. And this is why I get really excited about Couchbase. And I'm going to show you real quick. I'm just going to go here. I'm going to use MDB. MongoDB could be considered as a competitor of Couchbase. They're in the NoSQL space, database management as well. They have a market cap of 32 billion. That is 20 times what Couchbase currently is, with sales of 700 million, which is just about 5.8 times what Couchbase's sales are. We can see their gross margins are not 83% like Couchbase, it's 69.8%. But that is why it's such a huge potential to get into a company like this. Of course, it can go against me, and it has so far, but that's something I'm fine with because I'm holding on this company for long term. And what I can anticipate, what I can see happening with this company is that eventually one of two things. Either it's going to go back up, and I anticipate that this market cap and valuation is going to be at least 5x of what it currently is. The stock might go to $150 in the long run, or there will be a buyout for this company at a very nice valuation. So those are my hunches about this stock, and that's why I am really interested in investing even more money into this. So do your own due diligence, guys, and do check it out. Also, in the description, I'm going to put a link to access our free Telegram group for stocks and crypto. And you also get access to getting free stocks from Robinhood and Webull, and my entire portfolio of stocks for practically you can use that portfolio to retire on, and $50 with M1 Finance. So do check those out. Those are the ways that you can support this channel and me by using our link to subscribe, get free stocks, free cash, crypto, and get a free alerts. I hope you really enjoyed this video, and I hope this helps you. If you have any comments, please let me know what I can do better. And thank you so much. Have a great day. Goodbye.